Everyone, this is Professor MoneyPigTrading, a former PhD drug researcher, now a data scientist and trader. And today we're going to talk about CCIV and Lucid Motor merge confirmation. And today is February 23rd, 2021. So if you watch the market and have a CCIV common stock or warrant, you probably watch it very closely. It just confirmed merged yesterday at closing. Unfortunately, CCIV dropped 52% ever since the news has been announced, and we can see a lot of volume actually popping out. And like we mentioned, the $30 is a really strong support and has been holding. And today when we make this video, after market currently is trading at around $35, $36. So why the price dropped so much? The short answer is dilution. And we're going to go for little details about why the dilution. So really quick, we're a disclaimer. We're not a registered financial advisor. This is just education purposes. Please invest at your own risks. And we're still holding some CCIV stocks and options. That's also another disclaimer. So like we mentioned, the previous two CCIV videos and also the SPAC tutorials, we actually mentioned about the average after the merger happened. The ownership of the SPAC into the combined company will become only 40%. So that means a really big dilution. And we calculated based on that, the CCIV, the fair market value should be around $29 per share. Today, we actually get the SEC document for CCIV and Lucid Motor after the news conference today. And we're actually able to get all the details, and here's our calculation. And the dilution is actually crazy, like we mentioned. It's actually even worse than we thought. So really quick, CCIV after combined to Lucid Motor, the CCIV common shareholder will actually own 15% of Lucid Motor, way below the average 40% like we mentioned in the previous study. So why is so low? I think the biggest factor is in the SEC document today. They're in the existing Lucid Motor shareholders. There are 1,175 million shares. So in total, makes 70%, almost 70% of the new combined entity. And the CCIV common shareholder in total have 258 million shares. That will only make 15% of the new combined entity. And also because there are a lot of redemption happened upon the merger, like a lot of common shareholders can elect that they don't want their share to be carried over to the combined entity. They can either sell the stock to the in the public market or choose to get some interest rates. And because of that, a SPAC company, a SPAC usually has to raise more cash through PIPE. And here CCIV actually offer PIPE shareholders 166.7 million worth of shares based on $15 a share. And that will almost be another 10% of the ownerships. Not to mention CCIV actually have public warrants. That's 41 million shares. Not exercisable for quite a while based on the SEC documents. So we don't have to worry about the dilution of this part right away, but that also owns 2.5%. Not to mention the founders himself has some shares and warrants. That's about another 2.7%, total making 100%. And that's why the dilution is so bad. And this is the number. I grabbed it really quick from the SEC document. If I miss anything, feel free to comment below, and I'm happy to make a correction on Twitter or make another YouTube video. So based on this dilution, we calculated the new CCIV fair market value. So from the bottom, we'll see the first column is the Lucid dilution valuation. Based on the merger, and also the valuation is actually a little bit tricky to calculate because there are two valuation being provided in the SEC document. We're starting from the lowest one, the bottom one, which is based on the merger valuation. CCIV actually evaluate Lucid Motor as 11.75 billion valuation. So based on that, based on the CCIV common shares, we actually can get the fair market value is $7 per share for CCIV. If we value Lucid Motor as $24 billion, that's based on the PIPE valuation, CCIV actually worth $14 a share. With the current CCIV price, which is traded at $36, the public market actually valued Lucid Motor as $61 billion. And yeah, it's traded at $36. So I think the target price now for CCIV is really tricky because based on the valuation provided by CCIV themselves, you can see that the fair market value for CCIV share of dollar per share is actually quite low, from the current price. But the current capital market actually valued it at $61 billion. So I think it totally depends on the public market what they want. I know Lucid Motor in the presentation today, very impressive. They are comparing themselves to Tesla. Let's say they're a tech company that have even better battery technology than Tesla. And they are going to compete with their major competitors that Tesla is Mercedes and BMW, and they have high confidence. They have the technology and scalability to beat their competition. Very persuasive on the technology side. I have no doubt on the future of the company. But whether you should buy this company right now, I think that's a really big question. Since as you can see based on the data, the dilution just massive. So I'll leave the target or the what's reasonable CCIV share to you based on all these numbers I provided here. And looking at the CCIV, we mentioned the last presentation, the last YouTube video, that CCIV has a very unusual low number of institute percentage holding. I think Institute actually got most of their profits before merger because I think they probably know there's a massive dilution. And compared to other SPAC names, usually have a relatively over 50% of the Institute percentage upon merger. So that's just another data you should know if you haven't watched the previous video. Like I mentioned, we actually have a SPAC tutorial video. I will provide the link down below so you can take a look and learn about dilution and how SPAC structure and what you should know, etc. And yeah, just want to highlight our long-term investment program in 2020 in MoneyPigTrading.com. We actually have very, very high return. We have about 40 trades, winning rate is almost 90%, and average return in 2020 is about 19%, so almost no loss. Swing trading, we actually have very impressive option focused swing trading in the aim to gain massive momentum trading and seasonality trading. And we have really good performance. January 2021, we have 74 swing trading, and the winning rate is 72%, which is staggering. And the average return per trade is 90%, which is ridiculous. And we just make tons of money, our member and myself, the company. And yeah, this is the performance. We're super transparent. We provide all the trading records. We'll soon update all this record on the website. And yeah, you can see it's very decent number, and it has been improving ever since. And we're also improving our trading style as well ever since we formed MoneyPigTrading. And yeah, just highlight like today, we actually make decent day trading, 6-day trading. We have 5 wins, hitting on Snowflake, Snapchat, AMC, and NVIDIA. Swing trading, CCIV, we actually made close on vertical close spread, debit spread, 185% revenue. And we're also hitting on SPX today with a really nice 144%. And here's one of the PL profit and loss screenshot from Thinkorswim. If you haven't followed us on Twitter, Jim Cramer also shouted out our content on Twitter. Our Twitter is MoneyPigTrading. And we also have Discord community on MoneyPigTrading.com, Twitter, YouTube, Instagram, or MoneyPigTrading. Thanks for watching. And if you like the video, make sure to like the video and follow us on YouTube. And feel free to comment if you have any questions. Thank you, and see you next time. Take care. Bye.